Following double-digit gains in January, sales growth in Calgary totaled over 1,800 units, or an almost 9% increase over the same period in 2013. While the pace of sales growth in the single-family sector slowed to 1.9%, sales growth in the condominium sector remained above 20%. Anne-Marie, can you explain why the single-family and condominium market sales performance is so different?
It's mostly related to the amount of listings or available product in the market. So the single-family market, what we've seen over the past 2 months, is that the amount of listings have actually declined relative to the previous year. So this is a reversal of the trends that we saw in the second half of last year. So with that constricting supply, it's really limited some of that sales growth in the single-family market. Meanwhile, the condo market has seen new additions to the new listings. Now, it hasn't been enough to reverse the total active listings figure, but we have seen that additional new listings come onto the market. So that has helped support some of the growth we've seen in the condo sector.
Without significant additions to the housing market, what will this mean for the months ahead?
Well, ultimately, when we don't have a lot of listings, you have a mismatch between the level of supply and demand in the market. So the demand still is strong due to those positive economic factors that have been influencing the market. But if the supply doesn't keep pace, ultimately you stay in these seller market type conditions. And what that does is it results in higher than expected price growth. And we have been seeing that. The price gains in the single family market, were over 9% year over year. So that's still a very strong price growth. The condominium market, on the other hand, definitely we've seen stronger gains in the apartment style condominiums. Those were double-digit gains relative to what we saw in the single-family market. But what's interesting to note about the condo market is even though those price gains are much stronger, they still remain below peak pricing that we saw back in 2007. So that is one significant difference. That market's almost acting as a catch-up relative to what we've seen in single family. But overall, if those market conditions tend to stay fairly tight, then that'll cause that stronger than expected price gains moving forward. Now, that being said, we still are in the winter type market and we're not into the spring market where we typically see those listings levels improve.
Anything to add, Anne-Marie?
There's been a lot of commentary lately regarding multiple offers. Now, just to clarify, now for us personally, there's no way for us to track how many multiple offers we do have. However, we have noted a few changes. So we have seen that the number of homes that are selling above list has increased. But again, when we look at those numbers and we look at that percentage, what's interesting to note is even though more of that has been happening than what we've seen in the past few months, it still is not as high as it was during that 2007 time. So we're still in a very different scenario today than we were in the last period of what was considered a boom. So that's just something to note. Another interesting ratio that has changed is we've seen that sales to list price ratio start to rise. So we've moved above that 97% threshold, but we still remain below levels that we saw again during the peak. So even though market conditions have tightened, we're still in a very different scenario than what we saw in 2006, 2007.
As we move into the spring market, we expect that listings will improve in all sectors. The rise in listings will help ease some of the tightness in the market, with price growth impacts varying by community and property type. CREB reports on sales statistics monthly. Make sure to check back next month for the latest news on activity in Calgary and area.